So what's up everybody, it's your boy again, Michelle, here right here on YouTube. Welcome back to my YouTube channel. Today I'm going to be talking about the first concept of my strategy, so that I can just remain in schedule. I was supposed to record it yesterday, which is Saturday, and today it's already Sunday. I'm just now going to record using TradingView, right? And for the coming up videos, then maybe we can continue to use this forex simulator. What I like about it is that rather than TradingView, you won't see your past results, like, because I'm in Russia, I can't purchase premium or maybe purchase the elite or the least expensive one on the plans of TradingView because I'm in Russia. Every time I try to purchase with Bitcoin or what, as soon as it sees that my IP address is from Russia, it won't purchase automatically. So first of all, I'm just going to put on the points of the rules of my strategy, right? First of all, we said on number one, I look at trend, and secondly, optimum trading zone, or you may call it what, area of interest. Then the third one, additional confluence, and the last, entry signal. These are the four main considerations I take when taking my trade. Execution. For me to take an end, I look at these four things. But as for me, because of psychology, all of you know psychology, sometimes when you are now in a bit of a profit, you just want to get out, you just want to show that it is profitable, you just want to prove that it is profitable, and you want to get out while you are still in a bit of a profit. And that is caused by by psychology. So to avoid that, you must also have a plan of exit. You must always have an exit plan. So for the full strategy to work efficiently, I also have an exit plan. So it is as important as entry for me. So at the end, I put whether it is stop loss or take profit, but you should have an exit plan. So on today's video, we are going to be looking at how I look at trends. So let's move on to our charts. The way I look at my chart, depending on the certain pairs, USD/JPY works very well with trend lines. Sometimes they are not there, but most probably on USD/JPY and AUD/JPY they are trend lines, and sometimes GBP/USD. And then gold, most of the times it does not respect trend lines, right? And then we have for the pairs I trade, we have AUD/JPY, right? GBP card. But what I see most of the or all my pairs, what I see which is respected by all my pairs is market structure, right? I use trend line, right, because it is going to come in end as an additional confluence. We shall talk about it in the other video of my strategy, right? And I also use EMAs also for additional confluence, and EMAs are they are the main factor in seeing what daily bias I'm going to have. So on trend, it is the one which is going to tell me what my daily bias is. The graph going to be going upwards today, or is the graph going to be going downwards? I do not consider market structure, I consider my EMAs. I used to use 3 EMAs, Bitcoin 150 and 200 moving average, but I realized as I executed more and more, right, I realized that the 200 EMA which I was considering, right, it was not as valuable, right, because I was trading in the smaller time frames. But if you are trading in bigger time frames, you can consider using the 200 EMA. On trend, let's talk about the first thing, which is trend lines. This is how I draw my trend lines. So I have entered in the USD/JPY. As I told you, USD/JPY most of the times it is the one which moves with trend lines. These other pairs, they are not very considerate. of my trend lines, right? Maybe they won't be valid, but let's take for example on GBP JPY, right? Drawing a trend line. This is how I draw my trend lines, like so. If we wanted to start where the trend actually reversed, yeah, we would do that, but I think it is safe for a person to draw their trend lines, right, when they have seen the shift of market structure, right? So this is how I draw my trend lines. I connect the touch points, right? Let's say our graph is somewhere around this area. I would take this extended ray, right? This extended ray, and then I connect these two touch points, right? When the graph comes back to retest that touch point, that is where what my point of entry is, right? This is how I use my trend lines. And then for a downtrend, right, we have our first touch point here, right? Second touch point. Maybe let's presume that our graph, our price is somewhere around here, right? Or maybe it was somewhere around there. Let's presume that our graph is somewhere around here, and we have 1, 2, 3 touch points in the 1 hour, right? You draw a trend line, right, connecting these 3 touch points. But how do they connect these 3 touch points? You take the first touch point and the last touch point before that area, and then you connect them. When the graph comes back to retest those touch points, right, that's when you want to take an execution. So you don't take an execution with trend only. I told you I have trend, area of interest, and what entry signal. Right now we have not yet talked about our area of interest, but as most of you have seen my videos, one of the main common area of interest I have is my psychological level. We can see that here we have an area of interest, a psychological level, whilst at the same time the graph is what? Whilst at the same time the graph is retesting my EMA, right? What do I need now? I need to go on that same area in the what? In the 15 minutes time frame and see what is happening, because that is where my point of entry is. So when I get in the 15 minutes time frame, right, I see that we have this candlestick pattern, right? But this is not an entry pattern for me, right? To be honest, this is not an entry pattern for me. What am I looking at? On my entry signals, I use candlestick anatomy, only candlestick anatomy, right? Whether be it bullish or pin bars, we shall talk about them later, all of them, right? Right now, we just want to see how we use the trend line. This is not an entry for me. This is a nice trade. You get your amazing risk to reward, but as long as there's no entry signal, I'm not going to enter, right? So I've seen that this is my trend line, right? It has 3 touch points before, 1, 2, 3, right? This is the 4th touch point. Here I just wait, right? I just wait for what? For the trade to for the price to do its thing. But when it came to retest here once again, right, we can see, but when it came to retest here once again, right, we can see that it is making a what? A retest of the neckline. If you see in the 15 minutes, right, this looks like a head and shoulders pattern, right? If I am to draw with my tools here, left shoulder, head, and our right shoulder, right here. And this neckline was retested by the price, and this neckline seems to be what? Also a resistance before, right? So this is an area of interest, right? After there's an area of interest, I'm going to look at what entry signal, and we do not need a professional to tell you that this is an engulfing candle. What am I going to do? What time is this? 8:45. 8:45 at my time. It's 8:45 a.m. Right now, right at that time, I'll be what? I'll be awake. So I'm going to put what? My prediction right here. Stop loss is usually less than 25 pips. So I'm going to write a stop of what? 20 pips here, and take profit of 600. It's just for an example. I'm not going to tell you how I put my stop loss and my take profit, right? It's going to be in another video. I'm just this video is its sole purpose is just to show you how I see my trend, right? And there you get your what? 1:3. Yes, it came back and you went in a bit of drawdown. You were going to throw up because it was now more than half of your stop loss, but still all went well and good. And for you to put a stop loss which it won't be taken out, like for example this trade stop was not taken out, right? For you to put a stop loss which cannot be taken out, just keep watching this strategy series. I will show you how to put a stop loss and a target, right, that have a high probability of being reached, right? So continuing with the trend, we see that we have another retest right here. What time is it? 20:45. Right here I'll be very much awake, right? And then let's just take our 2. Let's take our 2 here. Let's not move it into the further future. Let's move it just right here. We see that this area is an area of interest. Why? Here it acted as a support. Here it acted as a resistance. Here the price also what? The price also had some rejections, right? And pin bars. And now on our trend line, because the trend line is the one we are using to do what? The trend line is the one we are using to measure our trend, right? So we wait for it to come and retest on the trend line. It came and retested on the trend line. Now I have my what? My point of entry. My point of entry, I have an optimum trading zone here, right? And the retest of a trend line, which means I have already F2. I'm not going to talk about the additional confluence in this video. I'm just going to show you how I execute my trade using the trend line. So what do I want now? An entry signal. Is this an entry signal? Yes, it is an entry signal because we have a what? A doji candle. I'm going to put my what? My trade here with a 200 stop loss and a 600 take profit. Just for example, in instance, we are not going to be doing much of target and stops, right? So after seeing the doji candle, that is your entry signal. And then another entry signal, a bearish engulfing candle which engulfs the doji candle. It's all well and good for me. You would have entered at this point or at this point. It's all the same, right? So there you have it. This is how I use my trend line. For uptrend, right, it is the same, right? We have our uptrend. We have our area of interest. Inverted head and shoulders pattern, right? Left shoulder, head and right shoulder. Retest of this neckline, right? Of this optimum trading zone of the neckline, right? This is our support, engulfing candle, entry signal, and retesting of our what? Of our trend line, which what makes us go to the what? To the upward direction, right? And now let's take for example let's take for example right here. Let's say you wanted to enter right here. This is 15:45. I'll be wide awake. This is just in the afternoon. All right, let's say you wanted to enter here. All right, and there is our area of interest. All right, let's say you wanted to enter here. You don't have to wait for the retest of the trend line. The trend line is just to show you that you are in an uptrend. As long as you have your trend all correct and you have your area of interest, additional confluence, just wait for the entry signal. Right here I have my entry signal, a bullish engulfing candle. What am I going to do? I'm just going to put my long position right here after the bullish engulfing candle have closed, obviously. All right, I'm just going to put it right here. The stop, today we are just using a constant stop, but I have different stops. We shall talk about them in other videos. The stop 200, the take profit 600, right? And then we are stopped out. That's fine, that's part of trading, right? But as you can see, this was a good trade, right? So this is it, guys, about using the trend line when executing these trades. Now I'm going to talk about the next one I use when executing my trades. Right, market structure. If you watch my live videos, you can see that I was printing market structure like insane when on our last Thursday session videos. Right, so market structure, right, it's a very simple concept. Market structure, it only shows the trend by it only shows you the trend by by looking for the most adjacent highs or the most adjacent lows. Let's move to another pair. Right, GBP USD. Yeah, we have a cute market structure here. We have a very nice market structure. You can see that the graph continues to make a higher high, higher low, higher high, higher low, higher high, higher low, higher high. I draw these green lines on every lower low. All right, so when I see that the market structure is like this, right, there is not yet been a break of market structure. The market structure is continuing to do like this. I know that I have an uptrend and I'm just going to look for my area of interest to execute trades. All right, so when we are now looking again at a downtrend, it will be like this. We are looking at the most recent, right, at the most recent lower high, right? But when we are at a downtrend, we are looking at the most recent lower high. But when we are at an uptrend, we are looking at the most recent higher low. Why? We are looking at the most recent lower high. It is making lower lows, lower highs, lower lows, lower highs. But for you to know that there is a shift of market structure, right? The market structure has changed. It should break this lower high. How? It will break, let's say for example, at this point, it will break the previous lower high, right, and start to make a higher low and makes an higher high. You know that there's a shift of market structure because it broke the previous lower high. This is why when I see that the price is in a downtrend, right, I only look at lower highs, right, And when I see a price is in a what? Is in an uptrend, I only look at what? At higher lows. Right. Same explanation. When the price is making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, and continuously until it what? Until it breaks that what? Higher low. Right. It will start now making what? A lower low and a lower high, lower low and a lower high. Then we now know that we have a what? A break of market structure. Right. So let me just go on an example where there's a break of market structure, where there's a clear break of market structure. Let's take for example here. The graph was now preparing to make what? Lower highs, and lower highs continuously, and we even head and shoulder pattern. You'll really be convinced that this is now going down. Right. A lower high here. Right. And then we have the last lower high is here on this green rectangle. But as soon as it broke that lower high, it came back to retest it. Now this would be very convincing if it comes back to retest the what? The area of the what? If it comes back to retest the lower high. So it broke out and came back to retest. Right? So it is like this. It was moving with this fashion, the graph. Lower highs and lower lows. Let me copy as it is right here. I want to move this up and show you. I want to move this guy up, right, and show you how he looks at like when he's normal on the chart. He looks ugly, right? But removing the confusion of these candles, you can now see what I was talking about. You can now see what I was talking about, right? We have lower low, lower high. We have a what? A lower high and a lower low. A lower high and a lower low. A lower high and a lower low. You see, this lower high was respected and this one was not. Now you see why I don't care about these lower lows. You can see now why I don't care about these lower lows, right? Because even if the lower low, right, is sometimes not created, right? Let's say for example, if the graph was like this and it did not create a lower low, right? That does not matter. For instance here, it did not create a lower low, it created an equal low to the adjacent one. But when it came here, it did not what? Break the lower high. It went down and continued to make a what? A lower low. So this is why I do not care about the lower lows when we are in a downtrend. I only care about the lower highs, right? Because look at this, right? Let me extend here and then we continue to draw. As soon as it broke the previous lower high, right, that's where it started to make what? A market structure of an uptrend, right? So because of this strong optimum trading zone, because of this strong area of interest, right? There was some resistance here. Wanted to continue making what? Lower highs, lower lows, lower highs, lower lows. But the previous area, it became a support and it started making what? Higher highs, higher lows. It's not a higher high, but we have a higher low, and we have a higher high, higher low, higher high. Started continuing what? In that direction. This is just to show you how prices are not perfect, right? They do not move like they are shown in the textbooks, like this, right? Always retesting the adjacent low and making double bottom to show you that it's now about to go up, and retesting the neckline and starts going up with a nice and easy pattern. No, the price does not move like that. This is how exactly the price moves. So I just copied as it is. It is messy, and it is not very clear, right? So, but the more time you have in the markets, right? The more you practice, is the more you gain experience to see this market structure. On market structure, I'm already done here, right? On market structure, I'm already done. I'm now moving on to my EMAs. Now, this is how I use my EMAs. I go in my 4 hour. I take my indicators. Now, the EMAs are the main factor of my strategy, right? I look at market structure and trend lines after I use these EMAs. Let's take, for example, in the 4 hour, we are seeing how do these EMAs work? You should go and watch my full course, which I'm publishing, right? Of how we use different indicators, different technicals. Everything that I'm showing you is taught in detail, right? Right now, I'm just concentrating on showing you how the strategy works. But if you want to know in detail how the elements, like the technicals I'm using and also the indicators I'm using, right, you must watch the full course, right? So if you watch the strategy and you go to the full course, you now have a know-how, right? Like how this guy was using this. So this is the psychology behind using this, right? So if you watch my full strategy and watch my full course, then come back to the strategy, you have a complete understanding, but it doesn't guarantee you profitability. A person should practice. You should put in the work, maybe 2 years, 3 years work, so that you can now get the concept. So moving on to EMAs, as I told you, they are the ones that show my daily bias when I'm choosing my list in the morning. I use EMAs to choose my list. All right, I use EMAs and market structure. So I follow EMAs, then secondly market structure, and then the last one I follow is trend line when I'm looking at trend. So what am I seeing? In the 4 hour, I'm seeing that my slower moving average, right, is below the faster moving average. This indicates an uptrend, right? When the faster moving average is the one with the smaller period, right? For my case, I have a 21 and a 50 exponential moving averages. So the 21 moving average is the faster moving average, and the 50 moving average is the slower moving average, right? So for my moving averages, I use exponential moving averages, EMA. So after getting in the 4 hour, I see that we have a potential uptrend. I go in the 1 hour and I see that we have an uptrend also, because the faster moving average, again, it is above the slower moving average. And then I go in the 30 minutes. We have also an uptrend, because the faster moving average is below the slower moving average. When I see these things, that's when I go back to my I delete the indicator, because I now have the bias, and go to my 15 minutes time frame, right? This is when you see my 4 hour, it is highlighting up, 1 hour up, and 30 minutes up. Same applies for the down. I just use the EMAs, right? The opposite is true. When the slower moving average is below the faster moving average, we have a what? We have a downtrend. In this case, for the whole day, you see that this is indicating for the whole day. For the whole day on that pair, after seeing the 3 time frames, like the setup of the EMAs in the 3 different time frames I showed you, my 4 hour, 1 hour and 30 minutes. For the whole day, I'll be now looking to executing that direction on. A person could have sold here, right? At 2:30, I'll be wide awake at this time. I can enter the markets. A person could have sold here, right? We have a small bearish engulfing candle somewhere, somehow, right here. And we also have an area of interest, which is our psychological level. Yeah, that is perfect. But as long as it is not according to my trend, I am not executing. As long as it is not according to my trend, a person could have a take profit 1 to 3, 1 to 4. You don't know, maybe their stop loss will be even tight because of this condition. For example, the last trade which I caught on USDJPY, it was a 1 to 4, but he caught a buy trade when we were moving down. Where his TP was, that's where my entry signal of a sale was. You see, so it depends. My strategy is a trade with the trend strategy. So I do not execute these counter trends, trades, right? For you to use this strategy with a high percentage win rate, you should only use it with the trend. So the daily bias, the main factor for getting market structure and for getting trend lines, the main factor we use are these EMAs, right? To look. Then after my EMAs, that's when I come in my 15 minutes now and start drawing market structure, maybe, and then go back to the what? To the 1 hour. If a possible trend line can be drawn, that's when I start looking for a what? For a trend line and start what? Drawing the trend line. But first of all, I look at what? I look at these EMAs. They are the ones that tell me my daily bias. On trend, what did we look at? On trend, we have, first of all, we have the EMA setup, market structure, and we also have what? The trend lines. EMA setup is the one which shows us our daily bias. On market structure, you have your optimum trading zone, right? Or where you want to place your trade, right? And it also helps, right? Because on this setup, you have a daily bias. But when you now move on to the smaller time frames, like 5 minutes and 15 minutes, right? You are no more using the EMAs. You really want to see clearly how things are moving, how things are going. So that's when you start what? Drawing your market structure, right? So market structure is for what? It is for clarity. And then trend lines, you can use them, you cannot use them. Personally, with the markets out there moving nowadays, trend lines have been very effective for me recently, but they have been working at what? GBP USD, at USDJPY. But trend line, if you have a trend line retest, that will be very good, that will be very great for you. So on trend, I only trade when there's an uptrend or a downtrend. When there's choppy markets or when there is consolidation, you should not trade. I personally don't trade that anymore, right? You should not trade choppy markets or consolidations. I used also to trade consolidation, just waiting for when it goes to resistance and then target for what? For the support, because it will be a range, right? On ranging markets, right, or a consolidation market, they'll be moving something like this, right? Yeah, they won't be perfect. As I told you, the markets are not perfect, right? Maybe something like this, right? And then it will get out. And then, so if we draw a channel right there, we can draw a channel right here. You can see that sometimes prices go out, sometimes it does not reach, but you can see that it will be ranging within this channel, right? So what traders do, they just sell here, right, at this point, and then they buy at this point, making their take profit to be here, all right, and then they sell here, making their take profit to be here, and then they buy at the lowers, at the bottom of the channel, and sell at the top of the channel. This is very effective, all right? But I no more trade that personal. Just trade when you say what, a clear uptrend or a clear downtrend. Someone was asking, what do you call it, the mighty way strategy? You see, my strategy seems like it has a lot of things I look at, right? But if you look at these things, right, they are all textbook trading. It's everything you know. Like, if you just put a clear chart here, you can execute it alone. My strategy does not depend mainly on indicators, because if you see some of the strategies, you just look at 3 or 4 indicators and you are supposed to get in. My strategy depends on the skill of someone to analyze charts, because what we see on the charts is what we use to execute, right? For example, trend lines. There is no indicator which will help you draw trend lines. EMAs, they are also trend lines, but they are called dynamic trend lines, right? So EMAs is only for what? Daily bias. It's only to show you so that you know the direction of the day. On this pair, I'm going to be taking buys. If I'm now taking sales, I'm now going against what? The trading plan. I'm no more following the strategy. So market structure, we draw it. Trend lines, we draw them on our own. Optimum trading zones, we draw everything. Additional confluence, we see them on the chart, right? Entry signal, we see it on the chart. There is no indicator. It's not an indicator strategy, right? Except for the EMAs. So this strategy, right, by the way, it's called mighty way strategy. So you guys might think that this mighty way is the reason why my community is called mighty way. Mighty way for the community is different from the mighty way for the name of the strategy. Mighty way for the community, it's something else. So instead of writing we are now going to be using the multitude of mass technicals way of no. Mighty way, simple, mighty way. And then at the end, you just put what? Strategy. Because it's textbook trading. Or what I learned from my textbook, right? Everything that I learned from my textbook, right? And not everything. There's a whole bunch of things, right, in that 500-page textbook. But I took the concept I understand the most, right? I also used some concept which I normally use on this strategy. Like, there was divergence, there was 3-line strike. I know a lot of things from that textbook, and which makes sense. Like, for example, the channel trading. There was also I used this a lot. Not long time back. The RSI, right? The relative strength index. But I no more use them, right? After a long time, right? After a back testing and after a lot of experience trading with different, because I had to figure out this on my own, right? As you all know, I did not have a mentor, right? The mentor I had was a scam, right? He just took people's money and went away with it. It was called Genius Forex, if I still remember, right? You went with millions of people and just disappeared when social media was nowhere to be found, not replying people, and it's not good. So from there on, I did not take on mentors again. I had to figure it out on my own. So I had to print some notes from different websites. It was a long process, from different websites like Baby Pips, Price Action, Fastbook. I had to print a lot of notes, right, and make a thick textbook, right, which for a beginner I don't think it's necessary to read everything unless you only like reading for knowledge, right? As for me, I now know almost everything. Not everything sunk into the brain, but I now know almost everything from that textbook, right? And that textbook is the one that made me make this strategy. So my strategy is a textbook strategy, right? It's not mechanical, it's not robotic. This strategy, it really works for me, and I hope it can also work for you, right? Because what works for other people, it doesn't mean it can work for everyone, right? So I'm just going to post the full strategy, and we hope that it will work for you, right? So this is MMT way, from my institute, which is called Mighty Way Institute. I just had to figure out so that the same name of the institute is the same name of the strategy, and I came up with this name. Although it was by coincidence, it was also very fitting of the strategy because it uses math technicals which I learned from the textbook, but I filtered everything so that I can use the things that are most relevant in my strategy, the things that work for me. So with that being said, guys, this is the end of the video, right? Stay tuned. Until next time, keep working hard and also keep praying. With God, nothing is impossible, guys. That's the truth. With God, nothing is impossible. Don't forget to subscribe so that when we now have an update, new video on the strategy, you can get notified immediately and watch the video. So with that being said, guys, see you next time. Peace out.